Hey everybody, hey traders, happy Thursday. Inflation, what inflation? It's only higher, so are the markets. We're up 0.96% on the SPY today. We are up 1.23% on the QQQ today. The Dow's up 0.84, the Russell just over 1%. The dollar is down. I just put on a futures trade. Looking for an MES trade to give me some type of volatility squeeze in the next, I think I did 60 days on this trade. Let me double check here. Let me get logged in. I had to log out, log back in. I've got a trade I want to take on IWY, and hopefully that trade's still looking good. But I'm looking for some type of volatility play on MES. So this is micro futures, and we're in the middle of potentially a little volatility squeeze. Whether that's going up or down, I don't really know. The market's obviously much closer to all-time highs, so perhaps we have a break to the upside before a correction, or this is another potential bull trap where the market, pokes the highs, fails off the highs, and then falls. So I'm not sure, but I priced it out where it's pretty fair. I'm putting about a $930 risk on there to make a portion of that if price goes higher or lower, but also max profit would be about $1,400 if I'm right. So let me get into this. I had some fresh highs on the account today, which is always fun to see. That's a good thing. Let me take a look at IWY. All right, let me see what I get here on IWY. IWY at 241. Should have had this trade whitelisted. Let's go there, 147. Come on. Tasty, you're killing me, Smalls. Apparently that wasn't approved yet. Son of a gun. All right, well, I got to wait on that stupid trade. I'm trying to get this trade in. I want a little credit trade. I want to try to put some levels down here below or right around the 200 moving average. IWM was fine, but I think IWY is a better trade. I think IWX is a better trade. Tasty is killing me. Usually are pretty good. I should be getting approval on that, but I'm not getting any trade options here. So let's try this. Set to closing only. Same stupid thing. All right. Well, I'll come back to that in a sec. I'll share this trade. MES. This is the trade that I'm in. I'll walk you through this one. We have some additional Okay, So the trade that I just took here, I went out to April, and there, April 30th is out 76 days. Chart alarm going up. Where are we at? The X crossing 6110. Okay. April 30th expiration 6175 by 6375. This is a bull call spread. And the 6175, and this one I'm going more downside. 5700 bear put spread. 187.50 I believe is what I got filled for. Yep. Okay, at 187.50 debit. And I will look for that max profit. So 187.50 there. So times 5. So my max profit's around 1,400 bucks. So if I can take 187.50, turn it into 280, that's about my max profit. Anything around 225, 225 and make a few $100s, 250. Yeah, I'll see. So basically the trade looks like this. If price goes up to 6,300 plus, that's going to be good profit on the bull call side. If price is a fake out at these highs, if it's fake out at the highs and we have some type of drop back into all this structure support slash, tariff talk and deep seek drama and all this other stuff, then I'll see how quick it is to the downside before the dip is bought. But something tells me that right now, where we're sitting at these highs, this is the kind of make or break moment. We have seen a lot of weeks over the last did I make profit today? Yep, I was 2 for 2 on SPX today. Sitting here at some fresh highs in the year, so definitely have some good profits rolling in. Good positions. Took a trade off on XP. 2 trades on SPX. Added a roll on Intel INTC. I'm trying to think what else I did. Pretty active on the day. Added in the MES trade today. What else did I do here? Updated position close out for profit on SPY. Added in a buy order on Alibaba. Added in a covered call on Snapchat for some income. Put in a covered call on Coca-Cola. So just a little portfolio combing. Nothing crazy. But I'm going to watch this trade. So this is a micro futures trade, so I can keep the cost minimum. I'm going both directions. So either up or down. Now that's MES. I'm going to look at something also on MNQ. So MNQ right here. Probably the same duration, so the 76 days out. Let's go to the ticker. All right. So looking for some type of volatility play. Either this is, making its way back up to highs again with maybe some momentum to the upside, or we're going to have another fake out trade and another push back down into all this support. So I want to price this out. We're looking at about 1,400 points on MNQ. This should be like a multiple of 2. I'll try to keep the risk down to less than $1,000 for an upside of hopefully 1.5 or more. So if I were to go to the 22.5 and the 22.250. All right, this one might cost me a little bit more. I might not take this trade if I can't get it the way that I want. So 22.5, what is about a 4 to 5% move? Probably around 23,000. So let's just add it up. If I go 22,500, actually I'll do current price. 22,076 plus 1,487, 23.5. So I can sell that, make it a little bit cheaper. Maybe go one strike up. How much? What is that difference? 1045 to 1100. Okay, and then 22,250. 22,078 minus 1487, 22.5 down here. I'll go 22. It's a little bit, man, it's just way more expensive. That's like twice the price, man. It's a pretty terrible trade. It's not. I mean, buying power is a little pricey. Max loss is more than what I want to risk on it. Max profit is decent. So I've got a reward to risk that's greater, but I'm not going to throw 1866 at this trade. So I suppose I'll wait, and I'll probably just hedge MNQ with some, I don't know, maybe a better look at something bearish, like a very cheap, inexpensive debit spread, but nothing yet. So anyway, SPY today. Again, we are how many weeks in a row here have we just been testing? Today's price action, surprisingly this week with inflation data coming out higher than expected, nothing has really changed. Market's still resilient. Market's still pushing higher. Let me see if I can get a live feed on headline news today. So reciprocal tariffs that will be determined by a country-by-country basis. That was a big announcement today. Let's see here. Laying the groundwork for implementing new tariffs on foreign countries in which the United States sees a negative trade balance. This is the reciprocal trade agenda. Yield up to roughly $1 trillion of new annual revenue. Okay, fine. Doge is now looking at Social Security. Okay. What else? No timeline for implementation on new tariffs, says the White House. Lower their import fees on U.S. goods. 25% tariffs on steel and aluminum. We knew that. All right. Anyway, market doesn't seem to give a crap. The last couple of weeks of tariff talks scared the market on a Friday. I think it'd be silly to see the market do the same thing tomorrow. If the market comes in with a big red candle again, I mean, what kind of nonsense are we dealing with? It's like that was last Friday, this was 2 Fridays ago, that was last Friday. Do we have this week going up and then selling off, or are we finally going to break these highs? This is a testament to the market's resiliency. So we had our correction here in December. We've had about a 4 to 5% pullback. So when the S&P poked those all-time highs, we had about a 3% pullback on the S&P, and that's about it. We're sitting up around 3 to 4% for the year in total. Certain sectors have been outperforming the indexes this year. The NASDAQ is still clawing back and not at all-time highs yet. The Dow is also not at all-time highs yet. The Russell is nowhere close to all-time highs yet. So again, pretty resilient. VIX 1 day. Switch over this chart here. VIX 1 day. VIX is down here. This is the 30-day VIX down to 1512. VIX 1 day is down. SVXY flat. Dollar is down. Hopefully dollar down, yields down would be a good sign. This is what I've been talking about for the last month or so. If we're going to see a stock market making all-time highs, we probably need to see the dollar get weaker and the U.S. 10-year get weaker as well. We had a bit of noise on the 10-year this year. The Fed Watch tool has changed the outlook and the forecast for the Fed quite a bit this week. Oil, still pretty choppy. I got on my iron condor with some profit. Natural gas. Oh, snap. That's a good trade on natural gas. What is up with that guy? That's a big move. Natural gas is up around $1,400 right now. Okay. That's a pretty fast mover. So, expecting a lot of volatility. If we see natural gas, this is UNG, by the way. I did a diagonal spread on this one, so I'm looking at a trade that gets me up into the 20s. If it gets called away and I'm going to exercise both strikes together, it's going to be with prices above $23. That'd be my in-the-money call strike. Gold, not quite the new highs yet, but certainly getting some bid again today. We had one little kind of a two-day pullback. So that high to that low, and gold just stays bid once again. GLD up to some fresh highs today. Silver looking okay. Bitcoin red on the day, which is interesting with the markets being up. MicroStrategy at 326. Coinbase, they have earnings after market. We're at 300 plus. That level is filled. I took profit on Coinbase today. Had some other profits in some of my services. I closed these out this morning. Upstart had 2 winners. TTD was a trade desk. That was nearly a full winner. Pretty happy with that one. Coinbase took a winner on that one early before earnings. Uber was a winner last week. EA was a winner last week. Coinbase has earnings today after market. I'm not even sticking around for the trade. So I don't know what's going to happen here. I don't know if it pops up or pops down. Doesn't really matter. I took the profit. So Ethereum, anything good on this one? Still hasn't really come out of its hole yet. Copper, China's up, copper's up. I said this since Q4 last year. If we're going to see a big breakout on China, copper's probably going to be a good trade to go with it. So I've got a little 111 trade on copper that's slowly doing its thing. I went out to April on this one, and I just need some more time. But I'm up $600, just shy of $600, and I'll just let it work. So it should be a good little profit trade there. 610 was the strike I talked about today on the SPY. We're finally getting the directional flows to get there. And that's it. I'm curious what 610 looks like. Does it hit and reject? Does it hit and break through? Is this enough momentum to get the markets excited about all-time highs? I think the key to this, daily close or weekly close, is that we are going to have a sustained close above these highs. Because if we just come up here and test the highs and then fade off of them, there's probably more room for pause. So weekly candle to be determined by tomorrow. The weekly candle still looks pretty darn good, even though there's a lot of moving averages down here that should get hit. But you never know. There's pretty good order flows. There's certainly a lot of resiliency. The Fed's not doing anything silly. Tariff talk has not really budged the market more than a couple of percent here and there. But I'm a little skeptical. I'll get one more workspace here to take a look at some of the technicals. Let's go to this one. And gold. That's silver. Let's go to gold. We're getting overbought conditions on gold. The weekly time frame overbought conditions with some divergence. So I just be careful of a bit of a topping pattern on gold. It could be the round number, right? We're at 29.28. This thing could be just drifting towards 3,000. I think 3,000 is a pretty good profit target, or at least a spot to be trapping profits and moving stop losses. Okay, let's go SPY in indexes. So let's go SPX. There we go. I know this chart is messy, but just let me make some sense of it. So this is probably my biggest concern of any type of breakout to the upside, is that we have a lot of bearish divergence and a lot of bearish divergence. I know that's not the fun technical analysis, but I am skeptical with a 300 plus day bar count on the daily time frame, and also no momentum to really support this move and hidden bearish divergence. All right, so I just wouldn't be surprised to see a fake out and then a move to the other way. I don't know. I don't know what the reason why is going to be. I don't need a reason why, which is why I'm trading a lot of these markets both ways. Right. So if the market wants to go up, I can make some money. If it wants to go down, I can make some money. If it stays relatively calm and sideways and neutral, I can make some money. So I'm trying to have some diversified deployments and strategies to make sure that regardless of what the market does, there's ways to make some profits. But I'm a little skeptical of the highs. I'm not saying we can't go higher. In fact, hitting highs and making fresh highs in the account for the year makes me happy. That's easy. But I'm just thinking, if this were to break and then fail, if we don't hold a close above the highs, today and this week, then I'm a little cautious of that moving forward. That's all I'm saying, right? So could we go higher? Yep, we could go higher, and this would still print hidden bearish divergence, and this would still come up here with no additional momentum agreement, and at some point that would probably pull back and fail. I just don't know what the cause is, right? And I don't think anybody does. If the market's not going to dump, it's not going to drop, just stay the course. Okay, NASDAQ, here are the Qs. We're not at all-time highs, but we're close. This is the weekly time frame. So are we able to get to all-time highs on the NASDAQ? Well, if we do, if we get to all-time highs in price, but this is still showing disagreement, and this is showing from this level to this level to this level, is this showing disagreement? You know, do we have to wait for another overbought condition on the weekly? I don't know. On the daily time frame, okay, daily time frame, same thing. Could we go to fresh highs? Yep. But would we show disagreement here and get back up here for hidden bearish divergence or overbought conditions? Yes, no, maybe. Okay. So a lot going on. Markets up are fine. You know, the markets non-US have actually been doing pretty well. Surprisingly outperforming the US. It's the first time in a while, but it's not a huge surprise that you know the markets in the U.S. have valued at these multiples we haven't seen for a long time. It's making everyone a little bit worried about how concentrated things are. We're seeing a rotation away from Mag 7, right? So Mag 7 is up a little bit today. Heat map overall is pretty bullish. This is probably another reason to get the market to move. If Mag 7 can get out of this little chop fest, if Mag 7 is choppy, I'd expect more indecision on the markets. If Mag 7 can break and go higher, then we probably have the broad market go with it, right? Mag 7 goes lower, it's probably bringing the broad market with it. So this is one instrument to keep a close eye on, whether it's up or down, to see if this has enough power, especially for SPY and Qs, to drag the market up or down. Okay, so just a simple trendline break like that could be something to watch. There. Okay. What else? What other questions? Currency strength today. Let's take a look at the watch list. We've got dollar weakness today, which is totally fine. I think that's a big important thing to have. If you have dollar weakness and 10-year yields dropping, that's good for the stock market. I think the 10-year yield needs to drop a lot more than what it is. So there's your 10-year yield, which this week has basically been gaining all week. Even on CPI news and PPI news, was gaining all week. So it's still no better off. We're kind of hanging out in this like 4.5 to 5% window, making things a little tough. If we have a substantial push lower, if we get to some fresh lows here, then I think I could justify watching the markets going higher. We show a little bit of relief on the 10-year yield. I think that's good. That loosens up things in the mortgage market a little bit. Maybe some other longer term financing options, but 4.5 to 5% is going to be a tough spot to see all time highs. The Fed watch tool, like I talked about, this one has been pushed out to like October now, maybe even later. So going out to the probabilities table here, the market's now pushing a rate cut from June. Nope. July. Nope. Now potentially the first cut would be coming in September. So the Fed is now officially, according to these probabilities, a pause until September of this year. Okay. So what is this? Does it mean anything? No. It means that we have inflation data to watch. And inflation data this week came in higher than expected on both fronts. CPI was higher, headline and core. PPI was higher, headline. There's no core PPI, I don't think. Or is there? There might be core PPI. Let's go Wednesday this week. So here's your core CPI year over year. Right there. Forecasted 3.1 from a previous print of 3.2, came in hotter than both at 3.3. Not good. Did the market tank yesterday? Nope, it gapped lower, which was a bit of a drop, and then it came all the way back up and filled the gap, and then did some today and actually got to some fresh highs. The year-over-year headline CPI, 2.9 previous, 2.9 forecast, came in higher at 3%. So right there, arguably not a good sign for inflation. Month over month and core month over month, also higher than expected. So again, not a good thing. But let's take it one step further. Let's go to today's PPI. Well, clearly today can't be as bad, right? No, it's still bad because your core PPI came in with a upward revision. Monthly came in higher. Yearly core came in higher as well. Up. This is 3.3 forecast. It came in 3.6. with an upward revision from 3.5 to 3.7. Not a good sign. We have the year-over-year PPI raised from 3.3 to 3.5 on the previous. Forecasted 3.2, came in 3.5. So it's interesting how the market spins this like, yeah, it doesn't matter, just keep buying. So, I mean, what are you going to do? Market forces are market forces, and that's the drift, right? That is the drift. So we'll see what happens. But we are trading at a level that, I get it. Like, this market has coiled for the last couple of weeks. This area right here is a pretty tight move. If the market's able to break and go higher, there could be some release there. There's going to be some energy in the markets that need to be released, and maybe it goes up another, 1 to 2%. I'm just skeptical of how much higher it goes with any type of big momentum. So if we go higher, I would probably measure a move like this. If we go from this high to this low, okay, I'm just going to take a simple conservative measurement here. If we go higher, I look for that breakout. If we go lower, I look for that breakout. Okay. And I can leave this on the chart, but I wouldn't be surprised if somehow this market, does fake out and fall. And that would be a bear trap, like I just said earlier. I mean, that would be a little bit more sensical coming into like, tariff, and we're announcing them again. But yet the market's like, this is fine. This is fine. Right. It's like that cartoon where it's like the room is on fire. It's like, it's fine. This is fine. Right. So anyway, if we get a breakout, I can measure it. That'd be a 631 SPY. I know there's some analysts this year forecasting like a 650 or 660 SPY or 6600 on the SPX. Look, I think we can get there, but realistically, my concern is this: if we get to like 650 SPY, we're probably pulling back. If I go to this chart here, I mean, I think we have room to get to 630 to 640, but connecting these recent highs. Okay, if we blow this top off right here and we just go nothing but up, anything in this like 640 to 650 window, it is hard for me not to want to short this market. So I'm not trying to top it out, but if we do not pull back to this 200 moving average and we get to 60-50 or 60-60, I will be aggressively shorting. Like, I will be actively putting on bear put spreads, probably just buying puts and doing diagonal spreads, because I think that's a spot where we would be looking for a drop. 10% gain. I mean, again, anything can happen. I could be dead wrong in everything I do. But just based on what I see here chart wise, if we have no agreement with momentum and price action, we've got oversold or overbought conditions in this case. I just don't think we make a huge gangbuster breakout. So just be on the lookout for some type of fake out and fade. If that happens, then we're no better off than where we were. This is just a bunch of noise, and we're still dealing with a bunch of noise. If it blows the top off and starts to run, cool. I mean, I'm fine with that, but I'm not going to love it. I'm already out of the trade, Francois. I'm already out. Coinbase, I closed out early. We had a trade on Coinbase. I posted this in my newsbreaker service. We took a 275 by 277.50, and I had $1.13. I closed out for like $1.55 or $1.60 today. I just took the profit. There's earnings after market today, but rather than waiting for it, I just went and closed it out for $1.55 and took a 37.2% gain. So, and here's why. If the market goes higher, I mean, obviously I can sit and wait and hope that earnings is cooperative, or I can take the, nearly 40% winner, and then markets can do whatever it wants and I don't really care. And I can look at something after market or after earnings and maybe do like a vol crush. So I'm already out of the trade. Okay. Yield curve not looking good. Yep, that's another thing on the borrowed time that I've talked about for a while. I mean, I'm sure everybody's wondering. This is the stuff that, like, you can't model this crap. I mean, looking at the 10 and the 2 year, we've been disinverted here for a while. We look at the 10-month or the 10 year and the 3 month, we've been disinverted for a while. I mean, the only way this gets a little bit more tolerable would be if the 10 year 3 month is going to somehow invert again. That might be the only saving grace to this market. But the issue is, like, this is not a good thing. And usually that's leading to higher unemployment and a little bit of fragility and cracks in the economy. but we're disinverted, and that's usually where the timing comes in, where within about 12 months of a disinversion, there's usually a recession. And so technically this disinversion was December of 2024. So go out 12 months and 16 months, like we might be experiencing something really nasty at some point this year, or maybe into 2026, right? So I just think, I mean, we are on some borrowed time, but can the markets make all-time highs again and again and again? Sure. We're not there yet, but we have one all-time high so far this year in the S&P. That is it. So I wonder, can we get two? This is all-time high number one. We didn't get there. We're right back up here again. It looks like this market is trying some type of short-term breakout to the upside. Trying. But like I said, beware of the fake out. Because if this candle cannot close with any momentum and close above these highs, I don't want to see the candle go up here and then close red on the day, because that would be another freaking fake out. And we'd be looking at something like this, which maybe traders don't love this pattern, but this is what the markets like to do sometimes when it's indecisive. It will poke the highs and it will give back the highs, right? And so we have like this halfway structure here. We have these support levels. So I mean, this to me would be like, I'll just put resistance here, support's way down here, and then this is my halfway point. So this kind of acts as dynamic support along the way. But if I'm a buyer, I hate buying the all-time highs. If I'm a seller, maybe a short-term stab at the upside gives you some potential profit if the market fails, but I don't want to fight this flow and this positive drift either. But we'll see what happens. If I'm really a buyer in this market, I want to be buying the heck down here. I just don't know if that's going to happen anytime soon, right? So anyway, this is where, I mean, look, diversification is probably your best friend this year. If you're in some gold, you're in some silver, you're in some Bitcoin, you're in some value stocks, you're in some energy, you're in some utilities, some financials, those sectors have actually been doing pretty well. XLF, pretty resilient. I mean, since this bottom here in January, XLF has been up, it's almost 10% off those levels. XLU utilities, same thing, off these lows, up a few bucks. It's up around 7.5%. What else? XLC, up to some fresh all-time highs. This is a, what I do here? I did a 111 for, it's like 110 bucks on the trade. This one's probably in mostly profit. Let me check. That is XLC. So XLC is up around 500 bucks. I probably have some more time that's needed in the trade, but let me check what I can close it out for. Got into the trade for 55 cents. Max profit's 110. Yeah, I'm up about 70% of the trade right now. 67.7% max profit. So, but there's time, and I'm probably way outside the expected move now that I don't have to worry about it. Okay, what other sectors? XLY, consumer discretionary, still struggling a little bit. XLP, this is consumer staples. What people need, people buy. People are still buying. They're just buying what they need. So this sector's up a decent amount off those lows. Up around 7% off the lows. XLE, really choppy, really volatile. Oil prices have been all over the place. Okay, indices need to break out of their consolidation. I know, and they will. They will. Like this alone, I mean, I'm pretty confident we're going to get a breakout, right? It's just what direction. Are we breaking out like this? This is what could be, look, this is still a breakout. If we have price breakout here and then fake that move out, like this is a volatility expansion, right? So, look, 2016, first year for Trump's presidency back in 2016. Was he in office 2017? 2017 was like a weird low volatility. Every month the market somehow finding a way to grind higher. That's the first time that's ever happened in the history of the market. So is that what we're about to deal with? I mean, obviously we're not off to like the most fabulous start for the 2025 trading year, but for the month of January, did we technically have a green month? Yes, because December was a terrible month, right? So we had a green month in December. Do we have a green month in January? So December was down, January was up, February so far is up. I mean, maybe that's the thing. Maybe this market is only going to get to, 10% higher, 12% higher, maybe 8% higher, but it's going to be like this crazy long grind all month, every month of just back and forth. Or is the market super stoked and it's just going to be like blowout top? Okay. Or is it another big fake out? I don't know, but I'm going to try to figure it out. That's what I'm always trying to do. So we got to wait. But I think based on this level, tomorrow's close on the daily and tomorrow's close on the weekly is going to be the big tell, right? That'll be the tell. Because if we break the highs and that momentum is sustained, then we are probably going to drift higher, right? If we poke the highs and we fake out, then that's enough of a head fake to maybe consider, next week is going to be a little bit lined up for a sell-off. So, I mean, my answer for today is pretty straightforward. If we have a break and close above the highs tomorrow and we're making new all-time highs, and that's number 2 for the year, then you've got to wonder, is the NASDAQ right behind it to get back to the all-time highs? Is the Dow right behind it to get back to the all-time highs? Will the Russell play catch up and be bullish this year? Does the second all-time high become a third and a fourth and a fifth? Maybe, right? I am still looking at a volatility expansion, and it's right here. So we're in the window to get some type of vol expansion. Same thing on the Qs, which have been, I think the NASDAQ's actually even a better trade. So this one, from a volatility perspective, I think this one looks pretty good too, right? Like we're breaking some highs. This all-time high is right there, but is it possible to hit the high and then reject? So most important takeaway for me is: are we going to get to highs and close above them and stay above them? If we can't close above and stay above, could be a fake out, right? So the daily close tomorrow, the weekly close tomorrow will be a big tell. I think it's pretty easy. I've just got to wait until tomorrow, right? I don't see 3,000 being hit. 3,000 on what? 3,000 on what? You talking Dow? No. What are you talking, dude? Fear and greed. Yeah, we can look at this. AAII sentiment and also the fear and greed. Look at both. So right now, I see why this market's climbing the wall of worry. Interesting. So week ending of 212. That's literally a print yesterday. Look at this crap. This is actually showing like a pretty high bearish sentiment. Okay. Well, the weird part is usually that bearish sentiment coincides with a low in the market. I think the issue is we're only sitting at like 2 to 3% off the all-time highs, and the low is possibly being put in. Like that's a weird feeling to think like this market is so bearish at all-time highs. So I mean, look, I'm just gonna say like this crowd is probably wrong. So if we break those highs, I think this bull has a chance to run. So yeah, I mean that's really interesting. So week ending, look at this. The 1-year bearish high has been literally this last week. That's how bearish people are. I mean, leave it to the mainstream media to get all nervous. Up hitting the 85. That's good. We closed out for profit already. Good. There's enough concern out there regarding. I know, but that's the thing is like it's all concern. But does the market actually give a crap right now? And it seems like it doesn't. And it doesn't give a crap until price suggests that it actually does. So that's why I'm saying I'm just going to wrap up with this summary for price action. How does the daily candle close tomorrow? How does the weekly candle close tomorrow? And then we make an assessment on where that momentum truly sits. I think it's the perfect recipe for a fake out trade at the highs. Okay. But with this type of contrarian indicator right here, if we have the 1-year high in bearish sentiment, even though we are so close to the all-time highs already, usually this is a good indication of when to buy, right? Like 1 year bearish highs in sentiment is a good indication to be like, we should be buying. But it's weird to think like we're only a couple percent away from all-time highs, and yet it's like the highest bearish sentiment we've seen in the last 12 months. So I think you can define that as the wall of worry. And this market is climbing the wall of worry, right? Clearly it's climbing the wall of worry. But I want to see if price will support it. And so if we make a convincing close tomorrow and a convincing close in the weekly candle, then we'll discuss it more, because I think there's still some upside. I think this market's been waiting for some type of vol play for a while. It's been tight for the last couple of weeks. We've had a really choppy range since January. We obviously had some thinner holiday markets that we had to navigate. The pullbacks were pretty minor, all things considered. Like I expected a pullback towards like the 144, the 200. Never got it. Okay. So anyway, fear and greed index, we're sitting neutral. Market momentum, sitting here near all-time high, still considered neutral, which I think is interesting. Stock price strength, fear, stock price breadth, showing fear. Maybe that's where we get out of Mag 7 and broaden out just a little bit. Put and call options, neutral. Market volatility, neutral. Safe haven demand, neutral. Junk bond demand, greed. Okay, again, junk bond, that's high risk, right? Credit spreads are still pretty tight. That's pretty high risk stuff. So anyway, neutral. So as far as the contrarian goes, there's room for the bulls to exist here. There's room for the bears to exist, but right now the price is suggesting like bulls could win. And I think this is probably more so why. 12-month high in bearish sentiment, yet we're climbing higher. Yep, that's a good point. Francois says greed usually prevails. Yeah, it usually does, until it gets into a bubble. And then we know more about that the last 6 years, right? Get to a bubble, and then the market bursts, and then it breaks, and then it's ugly. But until then, everyone's just trying to go as crazy aggressive as they can and just buy everything they can, over risk, over leverage, and all of a sudden they give it all back. But we'll see. So, all right, let me do some quick spot checking here. Let me check on, let's see here. Amazon at 229. Qualcomm at 171. This is another trade. I'd like to actually take this trade out longer. Can this go anywhere? Earnings were pretty decent. If we get up to the highs at 170, it's like, I don't know if that's going to price in the way that I want it to. So might just didn't really have much of an earnings reaction. Disney didn't really get a big reaction there. Uber was fine. EA was fine. Those are profitable. MicroStrategy, I've got this one out to next week. Looking to see if we get back down below 320 or 315. Shopify, still watching this one for a couple of weeks. So Shopify is now up to 126. Okay, good. Let's see if we get up into like the 135 to 1. I'm going to put a chart alarm here at 140. Actually, I'll just put a break even. So 22. So I'll go like 135. 135 in the upside, or about 118 on the downside. I'll go 117. There. Dash up to some fresh highs. This is good. So I need this one to hit probably about 210 or so. And about 177. There. So definitely closer on the upside for profits there. Upstart profit app. This has earnings today after market. This one's also looking for hopefully a big pop to the upside. Based on this little, climbing back, there's a nice little gap here. If we have some positive moves, that could get us right above the 200 moving average. We fill this gap up. I'd be okay with that trade. If we end up fading hard, then hopefully it's just a full-on crash. But I've got a vested interest in this one. 435. Wait, oh, never mind. App. There it is. Let's see. I'm going to close this one down. This is actually in profit. So app, here, closing 250 debit, pulling for, I'm going to take 350 profit right now. See if I can close it out. Um, 250 to 350. Let me see if I can penny this down for a couple of cents. I mean, my max profit is $5 on this thing. This one's a little illiquid, so I don't love it, but I'm going to try to just penny it down and get filled. $348, $347, $345. Come on, you turds. All right, I just got filled at 340 on app. I'm going to type in a chart on that one. So 340 credit. Okay. Just do a quick update on this one. App, the 228 expiration, 430. Entry for $2.50 debit. Closing for 3.40 credit or higher. App blasted higher with large gap rather than waiting until full expiration. I'm going to bank the quick profits. 340 credit is fine. The close doesn't feel super liquid, so I'm okay. So I'm moving on. That was a trade. So do the numbers on this. That's not right. %36 winner. Fine. I'll take it. I mean, that's a huge move to the upside, but I don't want to see this thing fade back into the 435. So if we have this huge like blow off top and then the market fades hard, I'd have to wait a couple more weeks to make sure it stays greater than 435. And rather than waiting on that, I'm just going to take the profit, move on. That's a 36% winner, and I'll take it. Okay, so I can add that to the mix. We have some earnings in the next maybe, we've got Roku today. We have Twilio today. These will all be coming after market. I do have a Twilio trade in for $1.42. TTD, that was profit. Coinbase was profit. So yeah, good stuff. What else? Canva, Coin, app, 1 for 1. So a little update right here. Upstart 2 for 2, TTD, Coin, app, Uber, EA, all winners in this last week. We got Twilio aftermarket. Let's see what happens. We got DoorDash and Shopify looking better. Let's see if those movements continue to push higher. So we'll see what we get. Okay. And as I wrap up for today in the final hour, what I say the most important thing is if we can close above an all-time high and stay above the all-time high. So the daily candle close, the weekly candle close, all that is really important. Okay. Lee says Simons. No. What are you even trading? What's the ticker? Is this even a traded stock in the US? Do I have an ADR? I don't even see it, man. You have a ticker for it? Or is it a non-US play? So if it's this one, ENR in Germany, like I can't trade that. So if you got a ticker for me, let me know. But no, I'm not in it. Let's go advance decline before we're done today. 75% of stocks advancing today, only 21.8 falling, led by your fearless leaders, Mag 7. Tesla making a big run today. Nvidia up another 3%, looking better. Broadcom down slightly, but again, it's a lot of green on the day. It's pretty good. Industrial is actually down a decent amount. We came really close to that 610 strike. We're probably going to make a push here in the last few minutes or hit it tomorrow morning with a gap higher. Not sure. So it is what it is. Just keeps grinding. All right. So there's stuff on the watch list. I'm going to go before my nose falls off, and I'll be back tomorrow. By the way, if I have anybody in my Newsbreaker service, I've got a webinar tomorrow morning. I'm sorry, I got a webinar tomorrow at 1 p.m. and I've got an actual masterclass for my service at 11:30. So if anybody jumped into my Newsbreakers course this week, we have a nice chunk of winners. That's been, I priced them all out on Tuesday, and we've got time in the trades. The ones that are winning quickly. The ones we priced out still have a chance to get to those expected moves, which is what I planned for anyway. So we'll just keep doing our thing. But anyway, I'm hosting another masterclass. It'll be number 2 this week, just to make sure that from the new students that are coming in, you're up to speed, understanding why I trade the way I trade, what I'm doing with that service. So 11:30 a.m. Eastern time will be a Newsbreakers masterclass, and then I'll get another webinar tomorrow if anybody's interested in checking it out at 1 p.m. on Friday. Okay. All right. Tomorrow's a new day. We'll see you soon. Thanks. Bye.